Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. For decades, the physical border of your state was your operational boundary line. Business owners understood the rules of engagement. If you had an office, a warehouse, or an employee physically located in a state, you had what the law refers to as Nexus. You were required to collect sales tax from your customers in that state. If you shipped a product to a customer across state lines where you had no physical presence, you just shook hands with the state and walked away completely tax-free. This reality really sparked an unprecedented era of e-commerce abundance. Digital empires were built on the backs of the physical loophole. This is a definite loophole. But as the digital economy expanded, state treasuries watched billions of tax revenue completely vanish. Then, in June of 2018, in a landmark Supreme Court decision known as South Dakota v. Wayfair, the High Court completely rewrote the laws of economic warfare. They dissolved the physical border loophole. Today, I'm going to expose and walk you through the mechanics of the Wayfair rule and explain how selling across state lines from the comfort of your laptop can quietly expose your corporate treasury to a multi-state tax audit and some catastrophic penalties that can be associated. So this Supreme Court ruling, this Wayfair decision, really established a brand new legal doctrine known as economic nexus. The Supreme Court ruled that a state has the constitutional right to force an out-of-state business to collect and remit sales tax based entirely on the economic activity they generate within the state's borders, regardless of physical presence. Now, to execute this, nearly every state in the union immediately adopted some economic thresholds. While the criteria slightly differs based on jurisdiction, the standard baseline used by many of the states mimicked the original ruling in the South Dakota framework of this part of the law. That baseline threshold on a revenue perspective is generating $100,000 or more in gross sales into the state within a calendar year. The other threshold is a transaction threshold, 200 or more separate transactions within a calendar year.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
The watch out for many business owners here is really paying attention and not just managing your operations under the assumption that if the state hasn't sent you a bill, then everything is perfectly safe. But sales tax, they can be an extraordinary obligation, and it is a trust tax. It is called a trust tax held in a trust fund because you are essentially collecting from the customer and just passing it on. In a sales tax environment, the business is a temporary steward. You're just a steward and a pass-through to the state. And the state takes trust fund violations very serious. Now, most people that are doing economic Nexus and selling cross lines, they're using platforms that are facilitating this tax liability on their behalf. If you're not, you really need to pay attention and take a closer look. I'm Nathan Weaver. Lead with confidence, live with integrity, and build something that lasts.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.